On November 8th, Sam Bankman Fried, founder and CEO of FTX, had a net worth of $16 billion. 4 days later, it was zero. But did he really have $16 billion at all? Not really. Let me explain. During the COVID era of extra cash, partly thanks to government stimulus and people not having anywhere to spend their money, they started to invest. And all of this new investment money meant that the price of everything went up. It seemed like you couldn't lose, so a lot of investors got too trusting, too excited, and just pushed things higher than ever before. And in the middle of this, crypto seemed like the hot new thing. Many investors jumped into cryptocurrency trading without any real experience or understanding of how these cryptocurrencies even work. Pretty much anyone can create a new cryptocurrency. Dogecoin was created by two software engineers as a joke. Both became millionaires by accident. All you have to do is create a digital token and a way to track it, and then convince people to buy it. The entire thing is made of data, ones and zeros. Its value is whatever people decide that it should be. Kind of like the US dollar. As with anything in economics, the price of cryptocurrencies is based on supply and demand. The supply, or number of each cryptocurrency tokens in existence, is generally limited. The same supply with a higher demand leads to a higher price. It's Econ 101. By the way, if you find this video to be interesting, please hit that like button. It sends a signal to YouTube that it's worth sharing with others. So back to FTX and its founder. FTX was founded as an exchange or a place to buy and sell cryptocurrencies. Like many in the industry, they created their own token, known by the identifier FTT. In 2021, FTT reached a peak price of almost $80 per token. But remember that the price is only what people are willing to pay. And with a high FTT token price, FTX, the exchange, leveraged the value of the tokens that it owned to invest in risky investments through its subsidiary, a hedge fund called Alameda Research. And then as the great COVID investment rush started to settle, so did the price of the FTT token. By the end of 2021, the price of the FTT token had dropped under $50. From summer into fall of 2022, the price was in the mid to upper 20s. On the morning of November 8th, the price of an FTT token was about $22. By the end of the day, it was worth about $5. By the end of the week, the price of FTT had fallen under $2 per token, and billions of dollars in value had vanished. Investment experts say that losing over 90% of an asset's value in a week is a bad thing. This collapse happened in part because FTX's rival Binance dumped all of its FTT holdings. Without a strong FTT token, Alameda Research collapsed as well. FTX filed for bankruptcy on November 11th, and Sam Bankman-Fried's equity in the company was gone. The value of that set of ones and zeros was determined to be low, prince to pauper in less than a week. Just like the emperor's new clothes, the value wasn't actually there and probably hadn't been for a while. It's kind of like the Bored Ape NFT that Justin Bieber bought for $1.3 million, but is now worth just $70,000. There were plenty of mistakes made by FTX along the way. But the real collapse came because demand or trust in the FTT token had vanished. And without demand, prices fall. Economics strikes again. Stay tuned for a follow-up video about the mistakes that were made at FTX along the way, including what the replacement CEO called such a complete failure of corporate controls, and probably even worse than Enron. Please subscribe if you want to learn more about business, strategy, and the people involved. Have a great day.